Hello and welcome to another update video about ADA. It continues to be a slow weekend. No surprise that on Saturday we see little movement, little volume. We are still here in this situation that we've got a possible 1-2 setup, which is a bullish Elliott wave setup with 5 waves to the upside, 3 waves to the downside in a WXY correction. I did count so far this X wave as a triangle, and I still do. It's just the question, obviously we broke above the X wave high now, making this count not valid anymore. However, I did explain in the previous video that an X wave can easily extend, and it is very much possible, and I do explore that option on the Bitcoin chart as well, that this triangle is simply extending and that E was never finished, and that the D wave sits here. This is possible because D is above B, and that's also why I highlighted to you in previous videos that you can really only count a triangle as broken to the downside if, let me just move that across, if the B wave low is broken. It never broke B, as you can see here. That D wave high is actually a little higher, so it's only a tiny bit, but making this assumption still valid. So B wave low was at 37.56 cents, D wave low at 37.69. So that was the candle low, 37.56. No, 1 second, just need to move that. So the low was actually 37.56 and B was, okay, 37.56. Oh, okay. So actually the same price, pretty much exactly. Which makes it a possible barrier triangle, basically a descending triangle. But it never broke the B. Okay, and that's why it's so important to understand that the very first indication a triangle is breaking is a break of the D wave, but the confirmation is a break of the B wave. So we'll see, but again, just to emphasize why it's so important to wait for confirmation before calling a triangle is broken, because it needs that B wave break. The D wave break is an initial indication. The B wave break is the confirmation. So what could happen now is obviously that this triangle is purely extending out. That will be my view as long as we stay below the C wave high at 40 cents. A break above 40 cents would make me explore other options, which are absolutely on the table as well. But until then, we're counting this as an X-wave triangle that could simply extend up a little bit. What would be the ideal target for the E-wave? We can calculate that as well. To do so, we take the length of the C-wave, we go to the low of the D-wave. To be fair, we've now reached ideal target. 39 cents, the 61.8 FIB extension is an ideal target for the E-wave. Okay. So that is an ideal target. It's a very common one. So if it turns around here to the downside, it should do it here. It would be an ideal spot, okay? And then this E wave could be complete. Now I won't call it complete yet because we have not really that strong indication that it's done. But from here it could come down in an ABC correction. So this would be ABC in Y, A wave down, B wave up, C wave down in Y, and then complete the wave 2. So based on this analysis, currently, it assumes that we have not started yet the Y wave. The higher the E wave, the better actually, because the Y wave needs some space. If Y starts from here, for example, the ideal target would be the 1-to-1 ratio with wave W, so that wave Y has the same length as wave W. We would then reach basically perfectly 35.2 cents, which is also the 78.6 FIB level. So they are all levels to watch. Point to try to make here is that there is no confirmation yet that the third wave has started to the upside. So we are generally assuming that we are back in this uptrend here in a third wave. However, to really confirm we are in a third wave, I would want to see a break above, well, at least 40 cents, because that would make invalidation of the triangle very likely. Triangle will really only be invalidated above 40.55 cents, and a real breakout can really only be considered above 42.4 cents, because until then an overshooting X wave would be possible as well. So to keep it very simple, for anybody who's struggling to understand this, basically it's all probabilistic, right? So within this correction, you can various shapes and forms. You can get all these different corrective patterns. They move into each other. Main benefit of Elliott wave is to understand that we're probably still in the correction, but that as long as we're holding 35.2 cents, the focus can be on higher in a third wave. It's just not entirely clear if within this third wave, which subwave have we already completed? Have we already completed wave 1? I currently assume that, but are we still in this wave 2? And if we are still in the wave 2, is it a WXY pattern? Which it probably is, but this X wave, is it a triangle or is it going to be an overshooting X wave? I think these are the two key questions. And we get some answers depending on which levels we break. I talked about all these levels here. But most importantly, to keep it very simple, as long as we're holding 35.2 cents in our support area here, the immediate focus can be on higher. So basically giving the trade a little bit of space would not be a problem, would be a bit, it would be reasonable in my opinion. But yeah, we'll keep focusing on that. I hope that helped. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.